What's going on, guys? Grab a pen and jot this down. Today, we're going to quickly talk about buy the rumor, sell the news. It's a quick, short trading strategy. I think it's something worth paying attention to. It's more about the catalyst of what's happening in the news and to understand, hey, this is happening to the competition. I read something. I read it in an industry journal, let's say like a retail dive, an industry dive. There's something happening in executive C-suite level executive change roles, and maybe that news is going to get announced in the earnings quarter, or there's just like a delay factor by the time mainstream media hears about it, or it's swirling around in Twitter. That's the rumor. You focus on that and say, all right, what's true, what's false. Things like bad product reviews, executives changing boards, maybe a legal lawsuit that's hit the court papers or the court wire before it hits the news wire. That's a big change, right? In pharmaceuticals, as clinical trial results, FDA approvals, there's a lot of things that will happen beforehand, and obviously regulatory as well. Sometimes something you can see inside, like technology, you could see the open source code in some cases and be like, all right, this is happening in real time. And then on the flip side, you'd be like, all right, these are closed sources. Um, Maybe the updates are happening on like a LinkedIn where you could see employees shifting. Maybe they're like 3,000 people were let go and they just kind of all switched their titles and changed everything. And it didn't hit the news reports for 24 hours, 3 weeks, 2 quarters, who knows? That's the rumor. When the news hits, you're like, all right, I knew this information for 2 months. I could sell against it. And then that's the spread is like the time value, the difference in time value. You say, all right, this is when it happened. This is when everybody else knew about it. And there's some rate of change that you're kind of looking for, which is the beauty of every catalyst. Like, all right, what's happening today? Is it underpriced or overpriced? And will I buy it or sell it? And in the future, will I either sell it and buy it, do the inverse? And be like, all right, if you can identify that change, you'd be like, is the spread um, big enough? Meaning, is the reward worth the exchange and risk? So if you're wrong, will you lose money? Like, you don't want to buy a bad pharmaceutical stock and say, hey, this is worth, I buy it at $8, but it's really worth two. The rumor might be worth 10. Is it worth $2 upside, $6 loss? Probably not. You don't want that 3-to-1 ratio working against you. You want it the other way around, where you're like, I get it for 8, it's worth 6, but the outcome might be 24. So like, all right, this is gonna really pay off. This is an example that happened in the Big Short book. The small hedge fund, the Brownfield Capital Management, those guys talked about how they make these long-term bets and options on like outsized return, saying this is like an inevitable thing that's going to happen. Like Capital One is going to win these legislation or like litigation that's being done against them, and then when they overcome the litigation, they may pay a fine. But in 6 months, the company is going to be back at its normal run rate. So it might be trading at $60 today. It'll be 45 after the litigation. It'll be back at 60 in 6 to 8 months. And they're like, all right, we could bet against that because that's a very high probability of coming back or reverting to the mean. And those are interesting ways to think about how to buy the rumor and sell the news. There's so many more instances like that. I'll be covering more specifically in M&A where it happens the most, where the rumor is the biggest hype cycle. And sometimes those rumors make the hype cycle real. So it happens in different forms. It happens in different factors. There's a lot more to cover in these catalysts that we'll cover together on this journey.